Hello and welcome. It's Karen Young here from Property Zest Buyers Agency in Brisbane and the Sunshine Coast. And I'm just here to give you a bit of a market update, what's been going on in the Brisbane and Sunshine Coast markets. It's May 2022 as I speak here. And we've had a really interesting time of late. Certainly the pricing increases up here in Queensland and everywhere across the nation really in the last 12 months have been pretty incredible. So just going to give you a whirlwind trip of what's happened and where we're at now. So looking at the Australian sort of the numbers across, the national property market, if there's such a thing as a national property market, as you can see here, Brisbane has had 29.3% change in the dwelling values over the past 12 months. That's pretty incredible. And certainly in the southern states, in Melbourne and Sydney, we see really big changes in property prices when there's a big sort of growing, booming market. But we really haven't seen masses of gain like that in the Brisbane market, certainly as long as I've been buying property up here over the last 10 years. So this has certainly been a sort of really unprecedented surge in property pricing and was a little unexpected when it initially started, because obviously we all went into the COVID pandemic. Everybody wondered what on earth was going to happen. And property really had about 2 weeks of uncertainty before it really went boom. So pretty much 30% of growth in the Brisbane market here. And the Sunshine Coast has had very much the same sort of thing. In the last 3 months, though, you'll see that the growth rates, we had this massive trajectory of growth that happened over the last 12 months. It was really crazy prices, people chasing their tail, trying to catch up with those prices. But the last 3 months, we've started to see a bit of a slowdown. And when we say that, we don't mean prices are going backwards. I think sometimes people get a bit confused when they say, the market's slowing down. They think that means property prices are going down. No, the rate of growth has slowed down. So you'll see here in this slide, Melbourne and Sydney have seen a little bit of negative growth in the last quarter, but only, very marginally. But Brisbane, as well as Adelaide and Perth and Darwin, etc., have all still seen some growth. And in Brisbane particularly, we've had 5.7% of growth over the last quarter. So still quite a good market over the last quarter or so. But what we'll see as we're coming into May here, we've certainly noticed a shift in the market in the last probably 6 weeks or so, a real shift in the market there. Just something I wanted to show you here. I always say when there's sort of property pricing market changes and things like that, the higher end of the market often feels the bumps a little bit more than what I call the bread and butter market. So looking at this slide here, the 25th and 50th percentile sort of properties there have still seen these higher rates of growth, but you'll see the property prices in the higher end of the market has slowed down considerably more. So in April itself, property prices are still growing in Brisbane, 1.7%. So that rate has definitely slowed down here. And certainly, there's a number of factors going on in the world. It's so funny. I was giving a talk last week at my son and daughter's school to their Year 12 Business Studies group. And I was talking about the property market and also just about business generally. And I had this slide up, and it was about getting the kids to think about what are the things that affect the property market. And so we came up with all of our list of things, which corresponded nicely to my slides. Thanks very much. But what I noticed was it's a bit of a bingo card. We've almost got bingo at the moment for the things that affect the property market. So you've got things like the economy, a pandemic, a federal election. There's been recent flooding activity, changes to government policy around housing, increasing interest rates, and instability globally with a war. So we've really, knocked off all of these things and got, crossed off all of these things on our bingo card in terms of things that could possibly be affecting the market. So this shift that we're seeing at the moment, it'll be interesting to see, whenever we have a federal election, the market does indeed slow down. And, in the last federal election, there was talk of changes to negative gearing, and that's always a massive sort of confidence killer in the market. And we saw, property really come to a grinding halt whilst that campaign was going on to see who would get in and what changes potentially that would mean for negative gearing. So this time around, we obviously haven't heard the same talk from the opposition party about negative gearing changes, which is probably fortunate for them. But even so, you still see when there's a federal election a bit of a slowdown. So we've got that at the moment. We've also got the talk of interest rate rises. We've got a market that has been booming for 12 months and probably is in that, natural cycle of needing to sort of contain itself. So it'll be interesting to see once the election happens, how things pan out. Does the market continue to grow over the next few months to 12 months? Or is this the sort of that shifting and turning of the market? So what we're seeing now in terms of market measures, median days on market are increasing. Vendor discount is increasing a little. In saying that, there's certainly no real bargain just yet to be had, but certainly auction clearance rates are down a bit. The numbers of listings are increasing a little. Anecdotally, out in the field, so I'm out there buying properties, as are my team. We're certainly seeing the numbers at open homes over the last 4 to 6 weeks decreasing. The number of offers on properties decreasing. So for the last 12 months, we've been unable to offer on a property. Not very often, if any, have we seen where there's been no other offers on that property. But in the last few weeks, we have been the only offer on a property in some instances, or it's taken a few days for them to get offers rather than 1 hour after the inspection has shut. Listings are increasing, and auction rates clearances, we're also seeing those decreasing out on the ground there. I've seen properties sometimes passed in. I think vendor expectations are still high, yet the market is sort of pulling back a little bit. So just to give you an idea of the specifics, in Queensland, the lower budget investors, we often tend to look at areas like the Logan City Council area and Moreton Bay City Council, particularly out in Caboolture, and this is for that sort of sub 500 mark. We've seen a massive increase in growth, obviously, in all of those areas in the last 6 months, really, jumped up 100,000, if not more. So that sub 500K bracket is a very tough bracket now. And realistically, you're probably really only looking at Ipswich now. Areas like Redbank Plains, Collingwood Park, even those, though, if you're looking for 4-bed, 2-bath, 2-car, relatively new, those properties will be over 500, even in those parts of Ipswich. So sometimes you may even have to look beyond that. Whereas we did see quite high yields in those locations, the yields there have come back a bit because those property, the purchase prices have gone up and the rents haven't gone up to the same sort of level. So those yields are around about 4.5, probably best case scenario, and even then probably on a smaller block size. But that's kind of where you're at. So if you're at the sub 500 mark, you're really looking at Ipswich. When I'm giving you these ideas of what you can afford, yes, there are exceptions. Yes, you can get into Logan, for example, under 500, but you're going to have to compromise on something. Compromise on position, on the condition of the land, of the property itself. It might be a suboptimal positioning, might be close to a main road, could be a very small block of land, could be an unrenovated or dilapidated home. So yes, there's always exceptions. But that's where we're sort of looking at that sub 500 mark. Sub 600 is more where sort of Logan and Caboolture are now, and properties are even well into the 5s and even into the 6s there. Yields around 4%. So that's those lower budget type purchases around the Brisbane areas. In the middle ring, we sort of see that 10 to 15K mark or the 15 to 20K mark. So that 10 to 15K ring areas like Capera or Stafford on the north, Mount Gravatt East, for example, on the south. You're realistically looking at entry-level property around 900 to $1 million there. You can certainly pay a lot more than that for a nice property, but that's an entry-level type property. And that 15K to 20K mark, so you're looking at that sort of more outer middle ring, Bracken Ridge, Braid Park, Rochedale South, that sort of thing. Probably 650 to 800, I should say. Anything below that, you're really struggling now in those types of areas, and you would have to look at a suboptimal property, I guess, depending on whether your main priority is location or it's the house itself. Yields in this middle ring type area are probably 3 to 3.5 now. And in the inner ring, if you really wanted to be closer to the city, even at 1.2 used to be a nice number. Entry level now is really 1.2, and I'm talking entry level. You're really much more comfortable if you've got 1.4 to 1.7. Areas like Camp Hill, Morningside, Gordon Park, Kelvin Grove have all increased substantially. So the yields there are pretty on the much lower side for what we've traditionally seen in Brisbane. But certainly the pricing is up. So we've got clients with budgets even around that 1.4 mark, and we're struggling to get into some of those areas, depending on, of course, on what you're willing to compromise on the property. Once again, just to give you a quick insight into the Sunshine Coast market, there's really two sort of markets in the Sunshine Coast. There's the northern end, which is your Noosa market, Sunrise Beach, Sunshine Beach. Peregian Beach, Marcus Beach, all of that sort of stuff. Tewantin's a little bit of a thing to, a bit of a different kettle of fish. But that Noosa market, realistically, for a nice house there, you're looking at 1.5, 1.4, a real entry level. So I've got a picture of an entry level, Sunrise Beach house. That wouldn't be, super close to the beach, but nice, tidy property, entry level into that area. Realistically, though, if you're looking for, a nice home, or you're looking for a home to live in for yourself, a luxury home in that sort of area, you really need to be north of 2 and possibly even higher, much higher than that, particularly if you're looking at, say, Sunshine Beach as an example. The unit market there has also seen substantial growth. So generally in Brisbane over the years, we last 10 years of me certainly purchasing property there, we haven't seen a lot going on in the unit market at all. And I've always said the only unit markets I've really seen good growth in has been in the Noosa area and in Kings Beach in the southern end of the Sunshine Coast. But certainly over the last 12 months, we have seen growth in the unit market in Brisbane as well, which is great. Up in Noosa, Sunshine Beach, Peregian Beach, Noosa Heads, entry levels probably around 900K. Once again, you can get in lower. It might be a bit of a compromise or a bit, lesser sort of condition of property, but probably that 900 marks where you're probably going to be comfortable. In the southern end of the coast, that's a bit more of an affordable end of the coast there. Areas like, Buderim, Mooloolaba, Watala, Curramundi, Caloundra, Kings Beach, Pelican Waters, Golden Beach, all of those areas. Entry level for a house on the Sunshine Coast now, realistically, 800 plus. You can get a little bit lower than that if you're willing to look at a bit more of those inland areas and small block sizes. You can get some very small block sizes in some of the housing estate type areas in Caloundra South, for example, probably in the 7s. But realistically, 800 plus for a good investment there. You'll be much more comfortable with $1 million plus. And if you want to be very close to the water, to the beach, you're looking at, much north of that. I think probably more 1.2 and upwards. And 1.2 is probably a renovator near the beach. Units, you got a couple of things on the southern end of the coast for units. Realistically, it's sort of Mooloolaba is more of your touristy type destination. And the units there often tend to be or can be in bigger sort of resort type situations. So you've got high body corporates and things. So it's a lot more of a sort of, a holiday market there. You can get in entry level probably 600 plus there, much more for a view, of course. Kings Beach is a great spot for units as well, and there is a good proportion of owner occupiers around that area. Once again, entry level 600 plus, more for a view, but that is a roundup, I think, of the areas. Now, I just want to show you this. This is the Heron Todd White property clock from April 2022, and it's telling us pretty much that nearly everything is still a rising market, bar a few up the top there. So it'll be interesting to see, because we have seen a big slowdown. And are we really still rising, or are we really kind of hitting that peak yet? It'd be interesting to see. And same with the units, actually. Units are still sitting there on that rising sort of end of that clock. Always interesting. Don't know if it's where it is and how fast it's going to take us to move on to the next phase, but we will soon see. So I hope you've enjoyed this roundup. I've spoken really quickly, so hopefully you took it all in. I'd be very happy to speak to you if you're interested in purchasing any property up here. We've got a great team on the coast and in Brisbane. And also, if you've got a property that needs management, we can help you there. Don't hesitate to reach out to us, and happy property hunting. Cheers.